Hey traders, DayTraderRockStar here, and today we're going to be going over a video outlining the importance of why we have to stay within the set criteria of taking divergences. This is the key to success in trading futures. Now, we have a lot of traders, and this is going out to a lot of our members at Day Trading Radio, and if you're getting this and you're not a member of Day Trading Radio, let me start off by saying that Day Trading Radio is a live trading broadcast show that's live every day from 8 o'clock to 4 o'clock on DayTradingRadio.com. Do live trading. We have a huge community of traders around the world, and we've been doing this since 2007. We were one of the first and original broadcasters on the internet that do live streaming of trading, and we've been doing it since 2007. I don't think I've ever missed a day. I started trading in '96. And I developed a methodology that is called a high probability methodology. And basically, it gives us the best setups in the market that you want to trade. I give you a set of criteria. You just have to wait for, identify them, and we take them. Now, this is a marriage made in heaven, considering a lot of people are now getting into prop trading, which enables you to actually start an account without any money. And this is great because the low cost entry to this, with our discount coupons and stuff like that, you could really open up a $50,000 account or a $25,000 account, a $100,000 account for basically $20 to $30. And all you have to do is qualify, and then they give you a real account, and you trade that money, and you get to split the profits, and usually get to keep the first $10,000. Now, just listening to that sounds very easy, but of course, trading's not as easy as it sounds. But I try to make it easy for you. When we look back at this stuff and you become a student of the methodology, you will see how easy it is, and that the hardest part is just developing the discipline and the patience to take the setups and wait for the setups. Because the market is like an open casino. You could walk in there with a lot of money and just push a button and possibly make money and possibly lose money. But there are certain times when you want to place a bet, and there's certain games that you want to place a get at that gives you better odds. And I always use that as an analogy, just like anything else. But find something you're great at, understand why you're great at it, write it down on paper, and follow those rules. And that's how you become great. I use this saying all the time. And another thing about the prop accounts, it's a great way of learning. It's a great way of practicing. And you want to be able to practice perfect. You don't want to just practice does not make perfect. This is the saying I talk about on my show all the time. One of my coaches back in the day told me, practice doesn't make perfect. Perfect practice makes perfect. So every single day I review my charts. I try to show you what's moving. You should see it also. But when you start to see it and you start to believe it, then you've developed the confidence to take these setups. And you develop the confidence, and the next thing you know, you're there. The hardest thing is confidence, discipline, and patience, all right? So, the purpose of these videos is to kind of show you over and over again what I search out, how to find it, how to take it, and then we work together during live markets, and we do this. So this week is going to be a fantastic week coming up. We got a lot of the news behind us. The Fed is behind us. The jobs reports behind us. The market's all-time highs. It just, and things are on track. And what a Friday it was, and we're going to kind of review. I want to review the charts right now, just to kind of go back and show you what we're going to trade. And then after this video, there's another video going to be released today, which is our high probability or 10-4,000 watch list for stocks. And we apply the same methodology for picking stocks on longer-term swing trades, position trades, things that we like to hold for, say, 2 to 4 weeks, maybe even longer, maybe 4 months. It really depends on what the situation. But that is all defined on the videos that you receive here at DayTradingRadio.com. So feel free to head over there. We got great programs, great education, and the show on every single day. So let's start off by looking at the futures chart here. When we get in the morning, again, this I went back to January 1st or February 1st here, just to kind of show you what we're looking for. Now, if you're familiar with my methodology, I'm a divergence trader, but I also work on 4 stochastic bands that you see in front of you. These 4 stochastic bands are called my quad bands, and that's how we get what we call a quad. You'll hear quad rotation lots of times on the show. You'll hear different setups that are, just they come from different setups on our bands. It could be a coil, it could be a flag, it could be a quad rotation, or it could be a divergence. All those I could read on the stochastics here. All right. Now there's what we call a pure divergence, and I want to just start off with that. And I always review this, so I apologize. A lot of people might, are familiar with this, but I also want to just kind of go over some of the basics with you real fast here. Now, again, a lot of people might have seen this chart before. This is from one of my webinars, and we talk about the regular divergence and what it means, and what a classical, and what I call pure divergence is very simple to see. It's when you have a low in the price, right here, you can see that low, and then you had, the low in the stochastics. And then you had a little bounce in the price, and then it comes back down and makes a lower low. It goes lower than the previous low. Stochastics hold higher than the previous low on the so that's the divergence right here. Typically, price and stochastics momentum goes the same. The price comes down, stochastics come down. Price goes up, stochastics go up. Price comes down, stochastics come down. Price goes up, stochastics go up. Price comes down. All right. Stochastics come down, but they come down lower. You can see the lower low in the price. But in this case, we didn't get lower. So that's our divergence. That's what we're looking for. That's what we call a pure divergence. All right, not to go into detail on it, but there's different type of divergences I like to trade also. So I want to show you those. Here we have what I call a double bottom divergence. And a double bottom divergence is basically the same thing. The important part is having our stage 1. Here's a regular divergence here. On this side, on the left-hand side, you have a low and a lower low, and a low and a higher low. This is great to have on one chart. See that over here? I should actually get some kind of pen and mark it off for you so you can see it clear. Let me do that so you know exactly what I'm looking at. All right, so I'm trying to get this working for us here. So again, here's our regular divergence over here. I think we could see this line here. Hopefully you can see that. That is a regular divergence. A low and a lower low, a low and a higher low, stage 1 and stage 2. And then when we come over here, you'll see the same thing, but you can see the price kind of came right down to the same level. But the stochastics here were much different. It was a much higher rotation. So that's what we call a double bottom divergence. So we have two important divergences. We have our regular divergence, our pure divergence with a low and a lower low, and then you have a double bottom divergence with a low and an equal low and a higher stochastics. The important part is the stochastics have to be really a high angle stochastic. The higher this angle, the bigger, you could have a flat line stochastic where things are kind of just very, not as steep. The steeper this line, the better it is. That's what we call the angle and the degrees that mark that. Like to see anything over 10 degrees. Some charting programs let you automatically see what the degree is there. Now remember, the same thing works on the sell side. We have to have stage 1 and stage 2. Stage 1 is a high. Stage 2 is a higher high. Stage 1 on the stochastics is a high. Stage 2 is a lower high. And that represents our divergence. So these are the things that we're going to be looking for. Next up. Because the divergence is such a recognizable pattern and it's easy to recognize, it's very easy to put your protective stop in here. And then when you have a good setup, now look at this setup right here. A low, low with a nice reversal candle. The candle is important. That tail is very important. That really gives us an area to put a stop underneath there. So you have a good divergence, everything. Maybe you get in here, but you still got to put your stop underneath there. Sometimes it could pull back a little, but the majority of the time you're going to get an upside move. Doesn't mean that this is going to be the final low of the day, but we would tell you, I would tell you that if I did feel that way because of certain time frames. Lots of times we will make a divergence in the 9:30 to 10 o'clock area, which could be the low of the day. Excuse me. Um, in this case, this did come out at 9:30. Um, right there. Here's one more chart here, kind of showing you the two type of we have the classic or pure divergence, and then we have the double bottom divergence. The oscillator and the stochastics act in the same way, but the price acted. This is just as strong as this one over here. Now, there is going to be one more divergence we're going to be looking at, and I want to show you that. I don't have it on this webinar, but I will show it to you live right now. Let's go to the live chart and actually start breaking down the divergences and how important this is to take these. This is just, again, to kind of push this into, now, divergences, as you know, I put out a special alert called the Zello Alert or the Futures Trade Alert Network, which is a new service here at Day Trading Radio that comes along with your membership. My job gets harder and harder each day because I have to find these for you and manage these, and I don't want to miss anything like this. So in some cases, I might miss a few, but I feel like this week coming up is going to be a really good week because I have to balance my trading between identifying these on the fly, as you're going to see. This is let's get back to our chart. That's the DayTrader Radio site. Let's get back to our chart here. Now we're back to our chart. And when the Zello alerts are going to go out. Now, Zello alerts is an alert that's going to come over your phone. All right, it's going to come over your phone like a walkie talkie. You don't have to have your phone on. It has to be on, but it could be in sleep mode. It doesn't have to be and actively on and connected to anything. You have an app that runs on it, and this comes over like a walkie-talkie. And the only thing you're going to hear on these Zello alerts are divergences, high-level divergences. I don't want to just throw out everything. If you get a Zello alert, you should take that trade. All right, and on that trade, I put out a video just yesterday or the day before, just talking about what those Zello alerts sound like. I want to do it again for you right here because, I do work hard on making sure these Zello alerts go out, and they will go out at night too sometimes. If there is an overnight trade, I'm going to talk about that in a second. I just got a couple more Zello people on board here, so let me get them locked in here. I see some new people are on Zello. Except if you're not a member of Day Trading Radio, you could go over to patreon.com/Day Trading Radio and you can sign up for the Zello alerts there. And they're actually very affordable, just $20 a month on that. So let me get the Zello up here for me. And this is just an example of some of the Zello alerts that we've had. Good morning, traders. We have a possible 5-minute divergence starting out right here at 10:09. I am long right now at 16, and we're going to stop at the lows at right under 49.13. All right, traders, we made it up to an area of resistance. If you're still long on that last 5-minute divergence, consider protecting your profits. We have a bear side divergence here, sell side divergence, 49.30, 49.30, stop at 49.32. Good morning, traders. It is 11:51. As of right now, there has been no super signal future trade alerts. I'm just testing out the Zello. All right, so again, you kind of get a feel for what those are going to be like. You're going to get the time. You're going to get the entry. It's going to be real time, instantaneous. So it's not like you're going to have to check your email or you got to check your phone for a text and then look at everything. It's going to be right there. You're going to hear the audio, and it's not going to be intrusive. It's not going to be constant. I would expect you probably would get 3 to 5, maybe 7, 3 to 5 on average Zello alerts, divergence alerts a day. Now, I like these alerts. I want everyone to take these alerts, and this is the reason why. I want to show you the Zello alerts that you're going to get based off the chart. So let's just go out here. This is actually starting off last week. We have what we call here a kind of a double bottom divergence right there. Now this is 8:30 in the morning. Not every divergence is equal, but when we have a nice divergence like that, it is a good one to get. Now that's not a classic divergence where we take out the lows. It's not even a perfect double bottom divergence. It barely, it missed it by a tick to get down to the lows. So this is what we call a relative divergence. And a relative divergence is the price comes down relatively close to the previous low price, be it a double bottom. It would be a double bottom. It maybe misses it by a tick or something, but the stochastics are definitely showing that divergence, much higher rotation versus what the price did. And from that point on, we actually could see that the market moved up a little. This is 8:30. There's probably some news that was, the news comes out around 8:30 in the morning. I'm not sure what came out at this time, if anything came out. And this wasn't a real big move. It's not a big move. What can we say about that? 88 to maybe 92, 91, maybe 2 to 3 points on this. But you'll see these. All right, that's just one. All right, so let's continue to look at some of our divergences. Now, we have also what's called a 5-minute divergence. Now, the 5-minute divergence is the same thing. When we have the 5-minute chart, now you're not, unless you're familiar with the methodology and the teachings, you have a 60-10 divergence, 60-10 stochastic down here. All right, and the 60-10 really represents our 5-minute time frame. Even on this is a 1-minute chart. This is a 1-minute chart. Now, I don't want to confuse everyone because on the show we use a lot of 300 tick charts. But during the show, I identified divergences using the 1-minute time frame. I have the bots take the 300 tick because it's very good and everything is just a perfect match there. So I continue to use that until something better comes along. And as the market changes, we adjust with the change of the markets and we adjust our parameters and stuff. And right now, the 300 tick has been really good. But identifying the 1-minute divergence is what I specialize in, and I like to call those out. So when we have a series of lows and these big candles, but you have a series of higher stochastics on the 60, that's a very powerful, 5-minute divergence. You got a pretty decent move here. From this low to this low is a nice divergence. You have a nice pop. That's a little bit harder to look at because not everyone pays attention to the 60-minute. And you're looking at the 1 minute here, and you're really trying to concentrate on the 1 minute. Even though the 1 minute, and again, this weekend or this week coming up, I am really going to concentrate on it. But remember, we just showed you a pattern before. I just showed you just a standard pattern. It's down, a bounce, stage 1. And then stage 2 is the second move down. All right, that's what we're looking for. And that's our low and our lower low, right? And here's our higher low right here. And that's a pretty decent angle. It's about 10 degrees right there, 10 degrees. And it's also on the 9-3. It's also on the 14-3 right underneath. It's actually a little, you see how the 14-3 stochastic here is higher than that 20 line? And that's going to give you another tip here. This one comes under the 20 line. This one holds above the 20 line here. Maybe a little steeper angle. This might be about a 12-degree, 13-degree angle versus this one that's probably at 11, 10, or 11-degree angle. It's just a little steeper based off of how high that's really bullish on that. All right. Time frame is good. That's a good classic divergence on the 9-3, 14-3. And it's slightly down here in the 60-10. You have a slight roll up, but it's hard to read. But you're still taking this trade. This is a good divergence trade right here at 11-10. All right, so this is another that's a setup I want to send out on a divergence. So I'll say, all right, traders, probably this is what it would be. Hi, traders. There's a divergence here at, and I have to wait for that divergence to qualify. So it'd probably be around 11:13, 11:14, 11:13 in the morning. There's a divergence. I'm in at 48.81, and I put my stop in at 48.70, or underneath 47, whatever the low is, 74 here. That's important to put that trailing stop in there, or at least put that stop one tick under that divergence low. The odds are that this is going to work out good. The hardest part of this trade is going to be determining where to take profits. When you have a clear divergence, you get your order in and you kind of you have to let it work out. Now, if it comes back down there and it breaks down, that's fine. It's not like you're going to blow up your account on this. This is really good for prop traders too, because it's something that you don't have to worry about really, losing any money. You have such a high probability setup here that you got to take those. Now the market continues to move on. Now we are trading other stocks and other setups throughout the days, but I'm, again, with the futures, I just want to kind of point out how important it is to understand that. Now this was also what we call a quad rotation divergence. So this was what we call a super signal. It's when all four stochastics are oversold and we have a divergence. It's the most powerful setup that I send out. It is the number one setup, and it is worth its weight in gold. All four stochastics oversold except the 9.3 and the 14.3 give us a divergence, meaning that it holds off the 20, but the other two are, it's just something you have to understand, that the divergence and the quad rotation is just so powerful. And that is like the number one thing. So if you have a super signal quad, what I call a quad divergence, we're going to have different quads. Quads represent all four stochastics. We could just have a quad rotation. A quad rotation is when all four stochastics are oversold. If there's a quad rotation and a divergence, that's called a quad divergence. This is just kind of a quad rotation here. We got oversold, 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 and this one actually just above that level there. Tough to have that line in the sand and not hit that line exactly. But when things start to turn back up and you're very close to that, we tend to take that. All right, so because we're just focusing on the divergences and the Zello alerts that you're going to get this week, again, let's take a look here. We're just going to kind of cruise along. This is midday. And again, there's nothing really to concern ourselves with until we see something set up. So whenever we see things come down like this really fast, real fast, even get close, you got to be prepared to jump on that. That's usually an opportunity, especially in a very bullish, trending market, which it was on Friday. But this is on the first. What was the first here? This is the 432. All right, so that was on Thursday, I believe. So let's continue on. And again, you know what we're looking for here. Even here overnight, this little pullback we see here, up here, you can see this, that low, that lower low, that higher low right here. Just a small little setup means a lot if you're going to take a position. You want to at least have that little divergence on your side. Even in the case here of a pullback, after the market opens up at 6 o'clock, we tend to pull back. Sometimes around between 8 o'clock and 12 o'clock, sometimes we'll get a nice divergence. And if you get a nice divergence, it's very simple to put your stop there and let it play out. Your stop goes right underneath that divergence low right there. Market continues to tick on. Right now we're looking at Nothing really here. Let's get to the beginning of the day here. This is, I believe, on Friday, and we actually had the jobs report. The jobs report knocked the market down here pretty hard. But that's when we also look for divergences here too. So right here, actually, at 9 o'clock, we actually started to see a little divergence playing out between that low and that low, those two lows, and this higher low, that higher low right here. Again, very simple strategy. Put your stop underneath the candlestick low, and in that case, it actually came back. But this is a time frame that we like. The 9 o'clock to 10 o'clock time frame, we see a lot of reversals. We get a divergence in that, you're going to get that alert. When you have a very bullish market and we're seeing the market kind of push up, we're looking for divergences on small pullbacks, and that's something that's really works good. Lots of times you'll have a very good market that's running like this. We see this very strong flag out, move up. This is actually a tight divergence right here. If you could sneak, it's a sneaky one. That happened around 11:20. See that little candle that came down, took out the lows? Look at this. I remember I think I ended up taking that trade. That was 11:20. Hard one to find, but if you're watching the show, you're going to see it. Big setup there. Here we have what we call kind of a relative divergence, where market, we use this is actually, I call it closing price divergence. Lots of times you'll have a rogue candle that comes out and just kind of spikes down and pushes back up, and then we come back down and we meet that previous closing prices. Remember, the candle wick is the extension bar, where the close is where the body, the bottom of the body is, in some cases, or the top of the body if it's green. So if we could all line those up, and yet see a divergence compared to that, then you have what we call a relative divergence, and that's usually a good thing. And again, you want to put your stop still underneath that relative divergence low. So it's hard to find one that does not work. Here we have a classic divergence, high level divergence. Look at the steepness of this line here, 40 degree angle there. We actually have a nice one on the 9th. Very rarely you're going to get one on the 44, but when you do, and we do have it, that's really an important one. But here we go. You can see lower low, higher low, lower low, higher low stochastics, lower low, relative low, higher low. Big move up, big move up, big move up. These 3, 4, 5 setups. Again, just being in focus, watching these. Sometimes they sneak up on you. Sometimes you want to kind of watch that closing price here. It all hangs around there. We get the higher low right there. Right, when you can identify that higher low with the closing price higher, it's going to go higher. And that's how we ended up today. But this was the big one. This was I remember I just came back from lunch. I was kind of upset that I did not send this out on the Zello alerts because I just, I had to take a break for lunch. And we came back, and I just got back, and this thing just set up, and it was like, wow, that's something you like. Any type of strong market, and you kind of get these pullbacks like this, you look for that lower trend line to show up as a divergence. Any type of pullback, sideways consolidation, you're looking for that divergence. If it's there, it's there. You take the trade, put your stop under the divergence low. If you're trading the profit counts, you give it a shot. All right, you definitely want to give that a shot. So that was basically the end of the week in a very bullish week. And in the bearish week, the same thing. You might get more bearish divergences. We have just as many bearish divergences in the right, when you can spot them. Let me see if we can spot any here. Not that hard to spot. I mean, even though the market is going strong, you have to read the market too. This is kind of a relative divergence. You see how close we got and how steep this was back here. That's a hard one to gauge. There's a nice one right here. And you can see the big drop off here. And again, same situation, you put the stop. So look at all the opportunities we have here. And it's not being overwhelmed. It's not being too aggressive. You're only taking the trades. There's going to be better divergences than others, and you got to step up sometimes with the ES instead of the MES if you trade in that way. A lot of people like to take these trades scalping the options, in the money options or weekly options. This is also a great thing to do. So this works so well. Get these LO alerts. Make sure if you're a member of Day Trading Radio, you sign up to it. Very simple to do. Let me show you how to do it. This is the ones that are going to be sent out this week. Also doing the copy trading, and this is the ones I want to take copy trading also. This is the important setup. Even though I might be calling bear bull flags, other setups, this right here is what we want. Wow, look at that. Did I even miss that? 1230. Huge divergence set up there. Huge divergence. Huge move. Every one. 10 out of 10. 10 out of 10. All right, let me show you how to sign up for everything here. Make sure everything's on board. Okay, this is if you're not a member of Day Trading Radio and you just want to try out the future trade alerts, head over to Day Trading Radio. Patreon's Day Trading Radio. You do a search, just do patreon.com/Day Trading Radio, and you'll see some options here to get some of the extra things that we give to the members for free. The Rockbot script, the futures trade alerts. This is where you want to go there. Just click on join. And it's only, again, this is kind of an introductory thing. We already have a lot of people on it. So I said, this is for beta testing. And for those out there who sign up are locked in at $20. The next phase will be going up in price. So if you're locked in, you don't have anything to worry about it. I would not, again, you guys are very lucky because this thing is taking off now. I'm really happy about it. And, so take advantage of that. Plus, if you're a member, you get it. You already get it at DayTradingRadio.com. Now, the Rockbot scripts identify all this. They run on an NinjaTrader platform. We use these a lot. This is, again, I never really offer these to the general public. You have to be a member, but I am offering them on this. Or if you want to lease the scripts for $50 a month, you could do that on here also. Not many people know that, but if you do want to do that, you could do that. And then, of course, if you just enjoy the show overall and you watch the show from the outside and you enjoy, this is a one way of kind of just showing your support here. So I hope you enjoy that. Again, Day Trading Radio is the place to get it all. I got to do some more videos today, but this is really important going into tomorrow. We're going to really crush it tomorrow. This is the Day Trading Radio site. And again, when you log in, there's a lot of information here on this. And everything you get the tradeometer, you get everything. You can actually get a trial there, the Rockbot channel, the setups, the futures trade alert network, the watch list, everything. 3-month starter packages and stuff. I have it off now doing the video. When there's a great getting started link here on the site. Go up to the top here, and it'll kind of break down how to set up everything. If you want to get things set up for you, this is what I call my roadmap. And it shows you how to set up the prop accounts, how to set up the everything. There's some good videos on here. How to get the super signal, how to set up and sign up for the live trade alerts and stuff, and what you get here as a member of Day Trading Radio. So there's a lot of information here. The Rockbot channel, just too much to go over. You really just have to make your way over there and just have a good time and explore the whole thing. If you have any questions or anything, please email me. Some more information is found in the video. And have a good weekend, end of the week. I'll see you guys tomorrow early in the market. We're going to crush it. DayTradingRadio.com. Signing off. We'll see you guys in the markets.